Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with myself, head of research at Trade the Chain, as well as Monty and CJ, both senior analysts at Market Rebellion. We are here every Monday and Thursday to break down everything that's going on in crypto, equities, macro, TradeFi, all the buzzwords we will cover for you so that you are prepared for the week. So let's go ahead and dive in with the top of the news story. So I think what you're going to be hearing a lot on CNBC, Fox News, and every other media publication that you are looking at is we are smack dab in the middle of earnings season. Now, earnings season has been going on for all of April, but it is getting very hot starting this week and heading into early May. You may recognize some of the names on here. There are 3 out of the 5 FANGs are reporting. We have Microsoft, we have Alphabet, we have Visa, we have Meta, we have Amazon, we have Intel, and then we also have some big energy companies at the end of the week, which will be interesting as well. We kick things off with all the bank earnings, which were very mixed. Obviously did not lead to any positive price action. So far, earnings have been mixed as well. Tesla was down, I think, all the way up to 10-20% before recovering slightly last week. So these are definitely, it's not the earnings that we saw in the past few quarters where the predictions were kind of downtrodden, and obviously usurping and beating those predictions, beating estimates is obviously what we want to see. Now we're kind of faced with recessionary fears, and of course big focus on earnings and how that's going to play into Q2, Q3, and Q4. And then the other big pieces of news is GDP revisions are coming out on Thursday. And as you can see, the official number was 2.6, may get revised down all the way to 1.8%. So GDP is getting revised down. That's certainly not a good sign for it's a good sign for the recessionistas, but not too good of a sign for the bulls that want to see GDP increasing. Then we have PCE on Friday. And PCE is actually the Fed's preferred inflation metric. And as usual, we will be focused on core PCE, which is expected to come down to 4.5% from 4.6% the month prior. So obviously, if that comes down, markets should react positively, but we do not have this data point until Friday. So we basically have 4 full days of trading to kind of size this number up and then react on Friday. So that'll be very interesting heading into the week. But the moral of the story is we don't have too much important data to really push and pull markets around heading into Friday. So obviously that's why the big focus is going to be on earnings, because if Microsoft and Alphabet and Visa all miss tomorrow, I can pretty much guarantee you the NASDAQ and S&P 500 will not be reacting positively to those prints, and therefore crypto may be sliding as well. So obviously big focus here, but let's go ahead and talk about what's going on the charts. I think CJ is going to go ahead and kick things off with us, talk about a little macro equities, and then we'll move into all the fun stuff with crypto.
Thanks, everybody, and I appreciate that analysis and breakdown, Nick. If you want to just pull up my screen, I have a couple things that I'd like to share. I thought this was pretty funny. Maybe you guys do, perhaps not, but funny meme. Anyways, another.
Is there a hidden message behind the meme, CJ? You can't just drop art on us and not give us the reasoning.
Yeah, I actually was an art major, and I was tormented by that same concept that you just brought up. I always having to come up with an explanation for something ambiguous and arbitrary, which is kind of what people like to do with the markets as well, interestingly enough, even when there may not be an explanation for why price moved. This was just something I was noticing earlier last week, but you guys, I think I've talked about the Economist magazine newsprint effect. Remember I believe it was right after FTX, around 15 or 16,000, the Economist predicted, or they published something called the death of crypto. So I think this means that the AI trade is close to being officially dead.
So are we talking about shorting AI coins in the B slot for the session?
Well, I mean, yeah, Fetch AI has always been interesting. I mean, that kind of peaked a little while ago too. Unfortunately, I haven't talked about a lot of assets in which we could put this trade into. Fetch would certainly be one of them, but obviously that depends on different factors like Bitcoin and stuff. Overall, though, I think the hype around AI is about to reach a plateau. Another narrative that has been like really prominent, and I thought I would just preface the next section with this. Regardless of Zero Hedge or whoever, there is a ton of sentiment around de-dollarization, and that has resulted in gold going up like 25% in the last few months. And it's funny that folks now are declaring that gold is in a bull market or on the cusp of another bull market, when in fact it has been up like 25 to 26% in just the last couple months and could be putting in a triple top here. And to speak to that positioning, we see some interesting things in gold and in others, but I don't want to talk about that just yet. I want to talk about ES and NASDAQ and then lead it kind of back into the dollar and gold. So most importantly, looking at ES in the top left here, you can see speculators got very short after last week. So you see yellow is small retail speculators as well as large speculators. They got more short since last week, and commercials have gotten even longer. When we look at our rate of change oscillator for ES and for the COT data, it's still at 100. So therefore, I still have to follow this system and be long ES with a stop, basically at 4,100. And I still think that is the contrarian play, as momentum does get lost a little bit in the market. But taking a look at some of the others, for instance, NASDAQ is still neutral. Like, I wouldn't be long NASDAQ if I was trying to express a bullish view. Same thing with kind of Dow. Dow was basically the same as ES in terms of the added short positions, as was the Russell down here. You can see a lot of people were actually adding to their shorts last week as opposed to like covering them at all. So, and that makes sense, right? The technicals were really, really bearish. But anyways, the point that I want to get to now regarding gold and the DXY is that we still have very interesting levels, very bullish signals for the DXY, despite all of this conversation of de-dollarization and risk-off price action. If you look at the DXY oscillator, we are in like a buy territory zone where we have 98. And you also see the inverse in gold. So this is, indicative of people getting really long gold and getting really short the dollar. And in recent weeks, we now have people max long the Swiss franc, max long the British pound, and close to being max long the euro. So we're seeing a lot of bets basically for long gold, long currencies, and short the dollar. So what does that mean? That means we're in the middle of, relatively a pretty strong trend. And this thing is continuing to get crowded. But what that means to me is that when inevitably it does turn, because, markets, they all do top, but, catching a market turn is difficult because it only happens once. But, we're starting to show weakness, and the fact seeing people get longer as price goes down and therefore they can't support the trend, that's potential turning point coming in. So, I'm not long the dollar per se, but this is something that when it squeezes, it's going to squeeze hard, pretty similar to like what we saw in January. But as of now, and Monty and I have talked about this before, like FX trends are very powerful, but once they switch, they're equally powerful in that direction. So, I'm not really. What I would say to wrap this up, because I know it was a bit scrambled, if you were long dollar or if you were long gold and you're a trend follower, or you're long euro or pounds, or, it's a very crowded trade. And when it turns, it will turn hard. And, that's where people lose a lot of money. So
yeah, and I think one thing that I've been trying to tell Trade the Chain members is don't trade the extremes. Sometimes in trading, we get caught up in swings, or I'm going to place this trade at 9 a.m. I'll come back to it at 5. Hopefully, it's moving in the direction that I want. Something like that. You really want to try and time your trades very well in this market due to the volatility we're seeing and the back and forth ping pong in relation to various news cycles, meaning, one bullish day can be completely wiped by a data print or a Fed governor or a random headline in relation to the banking crisis or whatever. So trying to trade, breakouts, speaking of gold specifically, if you're long in gold at resistance, then you're kind of trading, you're creating a trade that is not great risk reward, because typically you'd want to short at resistance with your stop, just above the resistance, or, somewhere above the resistance break. Or if you want to long that break, then you would long the retest after resistance is broken and then reconfirm. So just trying to long at resistance is not, high EV, because, of just typically how you would approach those trades in any other given day. Then you tack on the macro environment, and obviously it becomes a much hairier situation. So I think a good takeaway from what CJ mentioned, agree full force, is don't try and trade extremes. Take safe trades with good risk reward and walk away when your targets are hit, or if your stop is hit, and then try again. So just want to kind of, I know a lot of us can get caught up in, Bitcoin's dropped 10%, it's got to go another 10%. Gold's up 5%, it's got to go another 5. Rinse and repeat for silver or ETH or whatever. So definitely something to take away there. Go ahead, CJ.
Yeah, I mean, I would argue it's very difficult, but sometimes the best times to take trades is fading the extremes or probing shorts when everybody is purely euphoric and only seeing one way. Now, if you do that, you'll get run over. And that's the point that I think Nick's making. But I do think if you're careful and have some nuance, that's what I try to do, is be a turn pick or time some of the extremes, but you have to do it with defined risk and be very, very careful to not eliminate your capital. But yeah, I mean, go ahead, Monty. You've been patiently waiting to deliver, so let's hear it.
And also, Monty, we do have a question for you down there. Don't need you to get to it immediately, but maybe you factor it into the conversation you're having.
Yeah, thanks, for sure. I saw that question about BNB. Can definitely hit that for you, no problem. But what I wanted to talk about was ETH BTC. I want to combine kind of two things that we've been talking about on this show, basically in every episode. We've talked about ETH BTC, one. We've talked about the importance of the Korean bid, two. I want to combine those today and show you guys exactly how they come together and how you can use them as a tool to gauge risk on versus risk off metrics, for the altcoins. So let's take a look here at the ETH BTC chart. Coming up against some support, that is a good sign for the ETH, assets, things like Lido, OP, ARB could plausibly bounce from this level. I don't think so, and let me tell you why. First and foremost, let me show you the Kospi. The Kospi is the Korean stock exchange, and we've talked about the importance of the Korean bid quite a bit on this show. And this thing is falling hard in the last 48 hours, falling harder than we've seen it fall basically since February. So, and that was the start of this 48 hours here was the start of what eventually was, a month and a half of pain for the Korean stock exchange. These two 48-hour candles, or these two 24-hour candles, could be something comparable like this. After a period of exuberance and positive price action, you get hit over the head with negative price action. People panic, and then they, sell off. But you might be wondering, who cares about the Korean stock exchange? I'm not trading that. But it's so important for crypto. And let me show you. Because if you take the ETH BTC chart and you overlay the Kospi, what you'll get is, and if you overlay the Kospi, I'm just going to add it to the same percent scale. You'll see that over time, they are highly correlated. So whenever we get a dip in the Kospi, we get a dip in the assets that are part of the ETH BTC trade. And you can say the same thing about Bitcoin dominance, which is another thing we talk about a lot as well. The relationship is there as well, right? So clearly the Korean stock exchange can be a gauge for altcoin risk tolerance. If you see the Korean stock exchange start to move from critical levels and, start to move upwards, go ahead and take on some risk. But if you see, the Korean stock exchange start to dump, I would, consider the opposite. I think this chart is much more highly correlated and thus more important to watch out for. But as you can see, it seems like much of the Korean bid has been going into ETH, BTC, or ETH related pairs, whether it be, ETH itself or underlying ETH assets like Lido, which would still add to the value of ETH. But clearly, there is a relationship here. And now that the Kospi is falling, we're seeing all those assets, including ETH, falling as well. So this relationship is alive and well, something to be aware of. As you can see, when it consolidates, ETH BTC consolidates. So just kind of keep an eye on that. And I really do think going forward that the Korean Stock Exchange is going to be one of the best gauges for risk tolerance in the altcoins going forward. And now let me get to that question from that viewer about Binance Coin, because I did talk about that in a previous episode. I believe it was last Thursday, or maybe no.
Yeah, I think it was Thursday.
Whenever it was, let's take a look at the chart. That's not the chart I want to take a look at. Let's take a look at this chart here. Okay, yeah, still got the trend line, still got the channel intact, right? And this one, again, highly contingent on the Korean bid, not unlike any other coin. Now, Binance is a more international exchange. It's not just Korea that's important, right? Also, this is hugely popular in China, in the Philippines, in Japan. This is an exchange that is used. In Europe, it's used. So it's not just the Korean bid that's coming in here. And I still like this from a risk reward perspective. However, it's tough to buy any altcoin right now with the Korean stock exchange in what looks like kind of free fall mode. So this is what I had set in the previous episode, right? I had talked about taking on this trade, slightly in profit now. Maybe I wouldn't change anything about this trade. If you got in on it when we covered it last time, I would just stay in it. Risk reward ratio 3.82. I like that. I think we have a chance of testing the upper channel. From a technical perspective, this has been one of the more sound looking assets in the space, in the sense that, we go up, we retest this trend line, come back down, retest trend line, come back down, putting in these series of higher highs, local highs, that is, and local higher lows or lower highs is convincing. And you're not seeing that with a lot of other assets. So I am in this position, for the record. I'm going to continue riding it until my stop is hit, which, as you can see, is here at around 4.25% down. So that's where I'd be taking my loss, cutting it at about that percent. It's less than 1% of my portfolio, but still a trade that I think looks like it could plausibly run even without that Korean bid. But if you're not in on it right now, it's tough to recommend a buy, or tough to say that I would be buying this, seeing the Kospi looking the way it is, and the Kospi is just not looking good right now. So you have those factors working against the altcoins. That being said, Binance Coin, from a longer term perspective, still has some nice technicals going for it. So I like it from that perspective. Ultimately, though, we need the Koreans to step up. The West, we're not cutting it over here. No one's buying the alts over here. We're just not seeing that sort of order flow. But the Koreans are certainly speculating into the downstream alts when we see risk on price action. And when you see this chart, it makes me think that, we might see a little bit more negative price action in the alts before they're ready to go higher. Now, that could present some opportunity for you that like to take risks to the downside and, short some coins. That could be what we talk about next. I know you guys have had your eyes on a couple of alts that look particularly weak or vulnerable if we were to get a move to the downside in, Bitcoin and ETH. I think that is a possibility given what we're seeing here from the Kospi.
Yeah, and I think just to kind of quickly hop in, with our favorite exchange statistics, just speaking about the Koreans, one thing that I found fascinating is how much they've been trading Serum. And if anybody remembers Serum, it was pretty much the top DEX on Solana, which I guess, being the top DEX on Solana at this point is like being the tallest midget in the room. It doesn't really hold too much weight, but they've been shorting the ever living crap out of it. And you can go check out the Serum. So I'm not going to entertain everybody with that, but I found that fascinating. Another one that's been heavily shorted the past week is Ripple, which I found fascinating. We were making the jokes that Ripple was trading like, Gary Gensler was going to win the court case, with it being a security. Obviously, conjecture, jokes, laughs. We don't know anything about that, but heavily shorted Bitcoin, heavily shorted Arbitrum, heavily shorted as well. And now we obviously just kind of had the conversation that, shorts were in vogue, and, there's definitely still assets that I think we're interested in shorting. But now that we've come so far off the highs, I kind of wanted to bring the conversation back and say, is it time to start thinking about longs, or should we continue with the short bias? And we have said many times on the show, don't fight the trend, but there are certain signs that you can look within the trend of a possible reversal. And I think we're seeing the first sign of that today, judging by the sweep of the lows of last week's lows very early this week and then back into the range. And now the reason if you're in the Trade the Chain community, we actually called this level due to it being the low and this entire range, and we obviously tagged it. We swept the low once. We've swept now last week's low, and we now have the best opportunity, in my opinion, to at least try and reclaim the top of the range, which would be 28K, possibly get above the 4-hour estimated moving average, which I would consider to be a very good momentum indicator for bullish or bearish. So I'll kind of pause it there because I definitely want both of your opinions, CJ and Monty, on this chart. If I'm looking at it from a technical perspective, I see, this low swept, last week's low swept. We're now back in the range. If we can close above yesterday's previous daily close, which is about 27.6, I definitely think 28K is in the cards. And when you're up at 28K, you can start talking about flipping that estimated 200 moving average, which would then possibly indicate a change in momentum. So what do we think here? Are you guys still looking for shorts, or are we, now that we've swept last week's low, are we looking for a little bit of long action? I will admit I am currently long, and I do like the sweep right here. So I entered along at about 27.3, currently in profits. So, disclaimer there, but I like where we're at for at least a few scalps. What do you guys think?
Like I said earlier during my segment, the one thing that worries me is the Korean bid. Now, that being said, we've seen in certain scenarios where people get overwhelmingly bearish on Bitcoin. I've seen people on Twitter talking about like retests of 18K. It's like, all right, guys, let's talk about 25K first. All right, we have plenty of levels between here and 18. And when you hear that sort of sentiment and that sort of bearish sentiment, that's what sets you up for a short squeeze. So I think that would be the scenario that drives us up to 28K, would be a short squeeze. Traders trying to pile in and short this here at the local levels. But if you could just pull up my chart real quick, Nick.
Sure.
I just, one thing that I was talking about with our community over at Market Rebellion was, just simply looking at Bitcoin from a relative strength perspective and where it was at in the last couple of days. I was really hoping, this is the market cap, excuse me. I was really hoping for a more doji-ish candle here. We ended up seeing sell pressure during the Asian session, and of course that can be attributed to the lack of positive price action in the Korean exchanges. And the fact that we're kind of flirting with this level here, where we've seen, wicks in the past, signs of supply absorption, that is that is slightly encouraging, but the lack of relative strength, the weakness from what I consider to be the most important indice to crypto being the Kospi, and also we have this sort of like narrative failure. CJ was talking about it a little bit, but the DXY being down, the dollar being down, that's where you want Bitcoin to be up. Like, if not the dollar, then where? The answer should be Bitcoin. It's not right now. So a potential narrative failure could drive us down lower, which worries me just a bit. But, Nick, one thing that I think is always important to look at is funding rates. So if you go to CoinGlass and you check out the funding rates, you'll see, people are getting short in the last 24 hours. Shorts are piling up. That is essentially rocket fuel for a move to the upside, right? Because those shorts could get plausibly squeezed out if the Kospi has even just a remotely positive session tonight, or we see, just the slightest risk on price action from Asia. I think a lot of those shorts could get squeezed, and we could see some positive price action that would make your trade more profitable. So I see both scenarios as likely, or both scenarios as possible. But for me right now, I think the more likely scenario is a slight move up, followed a slight move up with these leverage shorts getting liquidated, followed by a grind back down towards the 25K level. I think that is what I'm seeing, just based on the funding rate currently, the Korean stock exchange, and also just sentiment in general.
One thing I want to bring CJ in, because he's the master of open interest, and I definitely want to hear what he is looking at on the charts in terms of, it doesn't have to be just crypto open interest, but certainly if we're seeing a huge spike in shorts across NASDAQ or S&P 500 would definitely be interesting. But in looking at the big, talking about what Monty was saying, possible, reclaim of, possible early bullish price action of the week that could then be washed away. One thing I want to note is, last week, this is a phenomenon that you see often, but so this is where the weekly VWAP was when it closed yesterday. And obviously it opened down here. So this is basically a giant gap in the VWAP. And now this is not something that needs to happen, but definitely will happen if any bullish price action ensues. Is a lot of time you'll see price action completely come up and sweep wherever it closed, wherever the VWAP was when it closed. So if you're thinking of bullish price action, obviously, kind of taking the note when I mentioned don't trade the extremes. If you are bullish, your natural target would be the 28K level, because that is the top of resistance, and we already noted last night. It also coincides with the 4-hour estimated 200 moving average. So 28K is your natural resistance. And if you're trading that breakout, you're probably going to get hurt if you're longing around 28K. Now, it definitely could break up, confirm, and then move higher. So I'm not saying trade this, but I will say last week we got pretty scary price action to start the week. And then we immediately reclaimed that close and then shot lower, which is kind of what Monty said. So just if you are bullish, just be very careful about where your targets are in trading the extremes, because I think 20K is going to be very hard to overcome if we get there. And if you are trying to target this previous VWAP close, which is 28.8, which isn't a horrible target if you are bullish and we do get above the 4-hour estimated 200 moving average. But again, trading extremes is not the move right now, and you should take your profits and move on. That's why I'm obviously not shorting the 27.2 levels, because of this wick higher. This could completely collapse and move lower, but right now there's no reason to start shorting indiscriminately when you have no confirmation of a reclaim or a rejection yet. And we are at the 1 week VWAP right now, which is acting as resistance, as is the previous daily close. So take note of that on the lower time frame. But when you're talking about higher time frames, will price reclaim up here and then shoot down? Well, we actually did see that last week, and we could definitely see another time in which that typical price action occurs. So just a little, playing it on both sides of the coin here so that you understand the full perspective. But obviously, anytime you sweep the lows and reclaim the range, it's usually an automatic long print or long trade where you would set your stop down here at the 26.9 level, which is obviously the low of this morning. So I'll leave it there. I'd love to hear what CJ's thoughts are on bull versus bear. Obviously, CJ, I kind of set you up for the open interest. Would love to hear about that, but also anything else that you're looking at in relation to being bullish or bearish.
Yeah, I think you did a really nice breakdown of open interest, especially with VWAP. That was very interesting. I'm not much of a scalper these days, so I also think one thing that I've kind of struggled with and something that I've tried to focus on in trading. I promise this, guys, this will be related. I promise. But it's like it's so prominent these days in social media, whether it be Instagram or whatever, that you get promoted like hustle culture. I always think about Grant Cardone or somebody like, you got to do something. You got to get out there and work, man, or else you're going to be a failure and not going to be successful. That is like the opposite in trading. Trading, you probably get like 4 to 5 times a year where you can just take money out of the markets with a very high probability. And the rest of it is just churn. And like for me, we had a nice move from 20 to 30. Could have gotten lucky with some shorts on the downside, but I think the best thing to do right now for me is just to do nothing and to wait. As far as my open positions, I'm long ES and I'm looking to get long dollar or maybe short gold or short various currencies that are the anti to the dollar. But in terms of Bitcoin, I struggle to find a very strong edge right now directionally and within positioning. I just don't think shorting is the right move here yet because there's a lot of shorts, negative funding, obviously. But then again, I don't really, if you were to say, gun to my head, what would you do right now, long or short? If I had to pick an option, I'd probably pick long because of all the things that Nick laid out. And this seems like a good area for like a complacency bounce where shorts are forced to cover. So I do see that merit, but personally, I'm just going to be chilling and observing until we get like some very strong momentum, or the idea that I liked, which may be possible, is like if we go up to the VWAP and we see rejection from that level, maybe there's some altcoins versus BTC pairs that I could begin shorting. Something like Uni BTC is like basically been forgotten. Another one, CFX potentially BTC looks like maybe it squeezes up for another couple days in a complacency bounce, but eventually bleeds and gives some of the previous 3 months of gains back. Either way, I don't have enough conviction or justification to really act right now. So
I definitely agree. And I think that's why, although I am long here, that's just because the textbook tells me to take that long anytime it's given. Anytime you sweep those lows, reclaim the range, usually a good punt. But like CJ said, I'm certainly not taking, I have no swings right now and I have no long-term trades. Everything that I'm looking at right now is very much intraday until I see a long-term trend or a long-term bullish trend reclaim, which in my opinion would be the 4-hour estimated 200 moving average. So I do agree, best to be patient. Do not force trades. I said it, and I'm sure Monty and CJ have said this before, is protecting your capital is always better than losing your capital. And protecting your capital means that you're outperforming the vast majority of the market just by being at the exact same monetary amount you are today, tomorrow. So don't force things, just because we're taking trades or we're suggesting things doesn't mean that you need to also do it as well. And that's why I always try to outline my stops and my active trades if I am talking about things. I don't want to lead anybody into the darkness either. And I think one final note, because there's not too much to talk about right now. And we're obviously at the lows. And if we break the lows, we're heading lower. And if we hold the lows, we should get a little bounce. But obviously, we're talking about Bitcoin, and I'm only longing Bitcoin right now at these lows. I'm not longing alts. I'm not even looking at them for shorts or longs as it stands right now because I want to see some more price action develop. And interestingly enough, weeks that we have, economic data have been kind of good, and weeks where we've had absence of economic data have been bad. Last week was an absence of economic data. This week we actually have something to look forward to. So just think about potential, feelings and sentiment and how the market is moving around. But in terms of altcoins, final question for you, CJ and Monty, are there any that you have found are good or have been beneficial to your trading strategy, whether it's long or short? Obviously we talked about BNB. Monty's kind of seeing the tea leaves a little bit on that chart. But my opinion right now is to kind of ignore alts unless you want to short them, because even when Bitcoin has been performing well over the past few weeks, altcoins have been continually bleeding. We've seen Render, INJ, AVAX, obviously a couple outperformers, but vast majority have been bleeding against Bitcoin. Even when Bitcoin has a rise, when it dips a little bit, the alts are just selling off a lot more. So in that perspective, what do you guys think? Long alts, short alts, ignore alts? Are there a few alts that you're paying attention to, or is it just see what Bitcoin does, let the high beta stuff react?
If you want to throw up my chart real quick, I mean, the ETH BTC chart, I think, says it all. Like right now, we are at a critical point where, we're coming up against the 20-period smooth moving average. This is a level at which, you would define as a critical level because it's been both support and resistance in the past. So, if ETH BTC does continue lower, which it looks like it may break below this level, this is a make or break level for that order pair, then you can expect some, vast underperformance from the alts. But at the same time, it is kind of holding this level. So until we get clarity in either direction, I'm just sitting on my hands, being patient and waiting. I'm not going to, like you said, Nick, protect your capital, wait for confirmation before you inject your capital. CJ and I always joke, like, I like to think of my capital as like little soldiers. You don't want to send them out unless you're certain. And that's kind of
it's like risk, protect your armies, pretend they are, the whole point of it is like send out your soldiers so that they can come back and bring prisoners.
Yeah. So right now, I would not be shorting the alts. I would not be buying the alts. I'd be being patient. I know it's not the easiest thing to do, especially when it comes to altcoins. You want to get in on them. They move quick. But if this order pair does break down and we see confirmation, perhaps in like something like this, where we, break down below the 20-period smooth moving average, come back, retest it as resistance, and then go lower, I'd be buying right here. Or I'd be shorting right here, shorting alts, basically pretty much any alt. I think CJ's, Times article with the Fetch AI, I think this one's looking major toppy. The problem is this is going to be a crowded trade. When you're shorting trades, it's best to look for ones that are going to be flying under the radar.
Fetch may not be as crowded as it appears.
You don't think
I would
so?
expect something. I would expect something like CFX to be a lot more crowded in terms of shorts. All I'm speaking is because it wasn't recently at the local highs. Fetch, there might be more shorts in it now. I haven't checked, but when I was looking at shorts like 2 weeks ago and talking about CFX is way more crowded than something like Fetch, and I think the price action has somewhat been reflected that.
Yeah.
So many of these coins, just like that Fetch chart, like I want to short it so bad, but it's just you can't be shorting at that level just yet.
No. I think,
or not with any vigor or anything outside of a scalp. Like that's prime reversal time for that type of asset.
Like you could be really patient with this one. Like this has been an asset that VCs got in early, right? There's a bunch of buying way back here in December. Look at this precipice of bullish buying volume. That is still being distributed now because this was back. Let's look at it from a logarithmic perspective. All right, this was back in when price was 68 cents. So we're now dealing with a 33-cent asset. The buyers here distributing are enough to make this thing bleed for months. So I wouldn't rush into a short, because like Nick said, this isn't the place to be doing it. Like, if there were a place for it to bounce, it would be right around here where we've had support. Even I would even be more patient, as tempting as it may be to short from 33 to 29. That's a nice little profit. Wait till it breaks this level, because this was clearly resistance here. As you can see, it acted as resistance in the past. Once we broke above that level, we did make new highs. Since then, haven't been able to do so, showing signs of weakness with these lower highs. I think in the long term, this will be a good short. I'm waiting for a breakdown below this level. Going to go ahead and actually add an alert right now.
Yeah, that March low goes.
What did it say there? This alert might not function as intended because it's so illiquid.
No, it did not say that. It said it may not function as intended because I had it on the logarithmic chart. So,
could you please bring up the fetch BTC pair?
Because hold on 1 second. I just want to say on that last chart that Monty was on, once it breaks that March low, you've got a massive gap in trading. Like, obviously you've got that little range right there that it's got to break through. But if it breaks below that March low, that's when I'm shorting it with pretty much everything that I have. Because look at the gap that it has from 25 cents down to 10 cents. There's nothing. So once it breaks there, I'll short it with absolute vigor. But again, so just ask yourself, if you're shorting just because you like the chart, where's your stop? Where's your take profit target? So just think about that when you're placing the trade. Because I think just having that quick, mental exercise with yourself is like, if you're just going to go punt it because you like it and you think it's just going to go down, where's your stop? Where's your take profit target? If you're unable to define that with any sort of confidence, just walk away from the trade and come back to another one. It's that simple.
Yeah, it really is. And I think with this trade, be patient with it. Like I was saying, even though I don't hate it right now, I would still wait for this trigger to entry of around just below 30 cents. And then keep, like Nick said, keep the tight stop loss. That's going to be super important with an asset like this. It may not be that volatile. We will see. Sorry. But just set it right above these candle wicks right here. That's where you've seen distribution. So small loss for a potential large gain. I like that risk reward ratio pretty much all day. Look to set your stop at around 32 cents and, maybe take 1/3 off if we break below this level, or if we, do retest this level, because this may be a level where we find support. But anything below this, once we get below this, I'm with you, Nick. I think this thing could go all the way down to plausibly 5 cents. And not see any support. So CJ's laughing.
Strong contender.
Short support. That's the 100 IQ move these days. Yeah. Previously, if I could just interject real quick, could you please bring up the fetch BTC pair? And
right.
I think you probably know where I'm going with this. But
yeah,
before I said, I didn't see any explicit edge within crypto. Something that has been a very accurate edge, and I actually do think it will continue, and it could potentially work in both bearish and bullish market environments, is finding some of these alts that have already seen their best days, right? Likely have seen their best days. Aptos BTC, another great example. I mean, that's like the poster child of this point that I'm trying to hit. But I think, what I like to do, instead of shorting straight up on USDT, shorting on a BTC pair on an alt can be a lot smoother, and it'll give you a lot less time to shake you out. Because as you could see here with Aptos, there were days where it short squeezed in its USDT pair, but you basically would have never seen that if you were long Bitcoin and short Aptos at the same time. Could you bring up Uni BTC, please?
Yes, sir.
I think this is one that will continue to. Damn, 0 for 2 on the signals today.
I can't type, man.
I mean, just look at this thing and what it's done through the past few months. Finding these alts that, like I said, their best days are likely behind them. I think CFX, it's probably not going to be like Uni, obviously, but it's one of those, and same with Fetch AI. Go, 2-3 months down the line, I think we're going to be at, what is that? Like 400 or 500 sats, just below the March 15th low. Yeah, like right. If you were to keep going a little bit, yeah, like right there. That's the obvious longer term target for me in this BTC pair. So I think that's probably have a less chance of getting shaken out if you do the BTC pairs versus the raw tether pairs. I mean, do you guys ever do that? What are your thoughts in general on kind of the pairs trading versus dollar stablecoin trades?
I think it's a unique trade in the sense that if you short the coin and then if you short the altcoin and go long Bitcoin, I definitely think it's a nice alternate kind of trade. If you're not that sophisticated, then you might as well just short the alt, in my opinion, because then if you're longing on Bitcoin, then just kind of complicates something that's definitely more for an intermediate or advanced trader, because let's say they both go down and then you're like, well, why was I long Bitcoin? This was stupid. So I'm not saying you should do it. It's definitely just something. Go ahead. What did you say, CJ?
I just mean like let's say they both go down. Like, we have to be humble and we have to understand that like you're not always going to be good enough to pick the direction of the market. So yeah, even if Bitcoin goes down and you lose a little bit on Bitcoin, you have to think of the potential of what you would have lost if both of those assets would have gone up. And to me, the trade-off is worth it.
Yeah.
Oh, no, I don't disagree with you there. That I agree with you from the advanced side of the trade. I'm just saying, if you haven't traded for a very long time, or you're new to it, or you're still getting your wings, so to speak.
You better figure it out, son.
I completely agree with you. That's definitely a more difficult trade, and I think something that people should not just immediately jump to, but I think is a very in times like this, I think it's a much better trade because we're obviously seeing strength from Bitcoin in relation to other alts. So if you are going to practice that type of trade, this is the type of environment to do it. I think the past couple of weeks and months have been very good to the alt BTC types of trades, as just judging by the APT chart. That's pretty much the example right there. So
the reason I have this chart up is to kind of just talk about a little bit what CJ was talking about and try and just display exactly like the risk in shorting Aptos versus Tether is high. Like, look at this move up here. No matter if you were levered just 2x, this would have squeezed you out. Or maybe not. Maybe 3x it would have squeezed you out.
Good chance for it. Definitely. I mean, your stop should have been hit by then, unless you were just literally gambling.
Yeah. Right. But okay, so look at this chart, right? We had these big moves up. Look how much smoother the Bitcoin chart is. Please don't go for 4. Okay. See, look how smooth that is. We were making a joke the other day like that. Like, this is like a bunny hill. That was like a triple black diamond. Which one's easier to ski down? The bunny hill. And yeah, there were some instances where Bitcoin, moved up and we saw a slight move. But generally speaking, this is a much smoother chart, thus making it less likely that you're going to get squeezed out of your trade.
No, I think it's something that every sophisticated trader needs to have in their bag, because when the opportunity presents itself to have a more risk-averse trade, especially when conditions are present, is something you need to take. So I think everybody should definitely be learning what Monty and CJ are talking about, because clearly if you were focused on this style of trading, you would have probably banked a little bit more money than most and been a little bit more risk-averse to do so. But on just to play the devil's advocate, is right now, I wouldn't start shorting alts and longing Bitcoin today. Today's the wrong day to start that type of practice. I think, tomorrow, or, as the next couple of weeks progress, or as we get after PCE and we look to remember FOMC is, I'm pretty sure next week, it's next week. It's the 3rd. So, and when FOMC comes and washes all the volatility away, then maybe we can start looking at that with kind of fresh eyes. That's, I think, probably good, level medium right there.
Yeah, no, I agree with you. And just for the record, like I'm not short any BTC pairs. I just think that's a really interesting place to look if we have that sell in May narrative actually come to fruition. Because like it's easy to look at the Aptos chart in hindsight and be like, oh, I would have made a ton of money if I would have shorted that. But like you want like would you rather have an easier trade with a more guaranteed profit or like a really difficult trade with somewhat equal, maybe a little bit more payoff? It's like I know I am my own worst enemy. Like trading is hard enough. Let's just try to make it easier or smooth out the chart with BTC. I don't know. That's all I'm going to say about that. I think we've covered that point extensively.
Yeah.
No, certainly. I think we've covered a lot today for sure. I mean, I wish we got a little bit more. I mean, I wish we had a little bit more demonstration of where the week was going to head today, because I think after last Monday was a blessing, because we sold off, we piped right back to the highs, then we sold off, and then that's basically been the momentum for the entire week. So I think, we mentioned kind of easy money and when that presents itself. I think the easy money was very much last week. I think this week and going into FOMC is when the market is really going to be quote unquote defensive and volatile and trick you in terms of, where is your bias? Where are you placing these trades? Probably going to trade in some tight ranges heading into PCE and then FOMC. So I think, if you were on the offensive last week, maybe it's a good day. Today is a good day to recoup yourself, look at the markets, and maybe play a little bit more defensive heading in FOMC, because FOMC has been pretty good for trading. If we get that 25 basis point hike, pretty much a quick market nuke, which, been pretty much the pattern ever since they started hiking. And then we eventually have some sort of recovery post, quote unquote nuke. So I'm hoping that, PCE and FOMC represent the similar patterns that they have, but obviously we'll cover that heading into this week. Because PCE will be Friday. We'll speak to you guys again on Thursday, and then we'll talk to you guys at top of week next week, because I believe FOMC will be on next Wednesday, if I'm not mistaken, as well, or Tuesday. So one of those days. So with that being said, do we have any more, quick market topics or anything like that? I think we covered everything that I would want to talk about today.
Couple questions, but go ahead, Monty.
Just one thing I wanted to add, right? To Nick's point, we could get positive news in equity markets this week. And if you were trying to short Aptos here, which would be a bad idea because we are at the local lows, not where you'd want to be shorting something, which, by the way, note, how this is at a local low, a critical level. But when we look at it from a Bitcoin perspective, it is not, right? It's making new lows. So this chart looks very weak. And the way I like to think about it is when you're looking at these USD versus altcoin pairs versus the altcoins versus BTC pairs, is like these short squeezes are like moguls, and you need to be able to like survive them. And that's why I love this clip. So if you don't mind me ending on this clip real quick, when you're shorting, this is the Widowmaker. These are moguls. This is the bunny hill, right? Nice, smooth, easy ride. Don't be Homer, okay? Are you guys able to hear this?
I'm not getting any volume.
Here, wait, hold on. Let me sorry.
The widow.
There we go.
Oh, that one's for the ladies. Spinebuster, boring. Woo! Customizer. Don't hurt me. Here's my wallet.
Hi, diddly ho, shucks in boots.
Flanders? That suit's a little revealing, isn't it?
Well, it allows for maximum mobility. Feels like I'm wearing nothing at all.
Quit it! Must wash eyes! Uh-oh. Okay, don't panic. Remember what the instructor said.
If you ever get into trouble, all you need to
So
do is
Feels like I'm wearing
don't
nothing
let
at all.
Flanders distract
Nothing
you.
at all. Nothing at all.
Stupid sexy.
I'm having a tough time because this is like the third time you made me
What's
watch this
what's the
video.
Ned Flanders in the market? What's
These are short squeezes. These are short squeezes. That's what you're trying to avoid. And if you noticed on the Aptos chart, it's more like this, right? It was more smooth. But yeah, that's it. I know, CJ. I know. I keep sharing it, but it's such a good comparison because it's just such an easy ride down when the trade is like less crowded, and it goes not just for like the BTC pair, but also looking for trades that are less crowded, looking for trades that there aren't a lot of shorts in, where the funding rate isn't overwhelmingly negative. That allows you to, that makes it a lot less likely that you're going to get squeezed out of the market. So that's kind of how I've been trying to approach it, is, avoid those squeezes by looking for assets that are either one, smooth in the BTC pair, or two, low on the funding rate, meaning not a lot of participation from short traders. Those are the two things you'd want to see if you don't want to get squeezed out.
So who's the Ned Flanders in the markets? Is that Jerome Powell distracting us from what we need to see?
I hate to compare the two, but I guess in that case, yeah, he would be.
He's distracting us. So the one final thing I want to note is something that I've just seen interesting is the perp versus spot CVD charts. And something that I noticed this morning, which was a good catch, was perps were outpacing spot. Spot was actually selling into that little mini pump this morning. And it was pretty much all perps. So anytime you see that, typically that's an automatic short. And obviously we were, quite biased short this morning just based on that, told the TTC community. But interestingly enough, is we're seeing that phenomenon happen again. And I know I said I was long on the stream. I've actually closed that long. I want to be very transparent with everybody. And I closed that long because we're seeing continuous spot CVD selling while perps are longing. And if anytime perps are longing while spot is selling, spot is correct 9 times out of 10, and perps are merely just pushing price around just as much as they can, and then the price will typically revert to follow spot. Now, spot could certainly buy back here and lift price above the 27.3 number, which was pretty much where I entered. But I'm going to take things a little bit more risk averse here just based on how things are playing out. We obviously have seen a litany of buys come in, but anytime I see spot selling while perps are longing is typically a no trade for me. So I got out, pretty close to break even on that last trade. Wanted to be transparent with everybody there. So if CJ or Monty don't have any further trades or information, then we'll go ahead and wrap things up. This is Trading Rebellion. We are coming at you every Monday and Thursday for pretty much a 360-degree view on the markets. I represent Trade the Chain, which you can find at www.tradethechain.com. And Monty and CJ represent Trading Rebellion, which you can find at marketrebellion.com/try crypto. So without further ado, we will see everyone on Thursday. Good luck and happy trading.